All right, so let's dive into something that I think has been on a lot of people's minds lately, and that is the stock market. We've seen, pretty dramatic drops in the S&P 500 and Nasdaq, wiping out trillions of dollars in value in a matter of weeks. And I know a lot of our listeners are feeling anxious about their investments, and understandably so. But amidst all this turmoil, Treasury Secretary Scott Bessen is striking a rather, optimistic tone. He's actually calling this market correction healthy and normal. Now, I could already hear some of you saying, healthy for who, huh? And that's a fair question, especially when you consider Bessen's background. This guy's not exactly your average Joe, struggling to make ends meet. Before becoming Treasury Secretary, he was a big shot in the hedge fund world, managing billions of dollars and amassing a pretty hefty personal fortune. So yeah, maybe a little market dip doesn't keep him up at night. But here's the thing. Bessen's argument goes beyond just brushing off the concerns of everyday investors. He genuinely believes that this correction was necessary, even inevitable. He argues that the market was getting too euphoric, reaching unsustainable heights that were bound to come crashing down eventually. Think of it like blowing up a balloon. You can only keep adding air for so long before it bursts. Bessen's saying we needed to let some air out of the market before things got really out of control. He even draws a parallel to the 2008 financial crisis, suggesting that if the market had cooled down back in 2006 and 2007, maybe we could have avoided that whole mess. His point is that a little bit of pain now in the form of a correction is preferable to a much bigger catastrophe down the road. So what's his vision for a more sustainable path forward? Well, Bessen believes the U.S. economy needs a major transition, starting with getting government spending and deficits under control. He points to some of the Trump administration's efforts in this area, like creating the Department of Government Efficiency to streamline government operations and cut waste. But here's where things get a little tricky. Despite these efforts, the U.S. debt and deficit actually got worse during Trump's early presidency. So it makes you wonder, how effective can these policies really be if the numbers aren't moving in the right direction? And then there's the issue that's probably hitting closest to home for most of you, and that is the rising cost of everything. Groceries, gas, housing. It seems like everything is getting more expensive by the day. And in the midst of all this, Bessen drops a bit of a bombshell statement. He says, access to cheap goods is not the essence of the American dream. Well, let's unpack that for a second. On the one hand, you have millions of Americans struggling to afford basic necessities, feeling the very real squeeze of inflation on their wallets. Telling them that cheap goods aren't a fundamental part of the American dream might sound a bit tone-deaf, right? But on the other hand, Bessen's making a bigger point about the nature of the American dream itself. He's pushing back against the idea that our economic well-being should be solely defined by our ability to consume cheap stuff, often imported from other countries. He's suggesting that true prosperity lies in something more than just bargain hunting at Walmart. It's a complex and controversial argument for sure, and it leads to some crucial question. What does constitute the American dream in today's world? And can Bessen's vision of a healthy correction actually deliver on that promise for everyone, not just the wealthy elite? We'll explore those questions further as we continue our deep dive. But before we get there, let's take a closer look at some of the specific policies Bessen's advocating for and how they might actually play out in the real world, because understanding the nitty-gritty details is crucial if we want to truly grasp the potential consequences of this economic transition he's proposing. Okay, so let's dig a little deeper into some of those specific policies Bessen mentioned. One that kind of stands out is the Department of Government Efficiency. The idea here is pretty straightforward. Streamline government operations, cut out unnecessary bureaucracy, and ultimately reduce spending. Sounds good in theory, right? Less waste in government means more money staying in the pockets of taxpayers. But as we've already seen, the U.S. debt and deficit actually increased under the Trump administration, despite efforts like this to rein in spending. So what gives? Well, it turns out that governing is a lot more complicated than just trimming the fat here and there. You have to balance competing priorities, deal with unexpected crises, and navigate a political landscape that's not always conducive to fiscal responsibility. And then there's the issue of tariffs. Trump's trade wars have been a major source of economic uncertainty over the past few years. On one hand, Bessen and others argue that tariffs are a necessary tool to protect American jobs and industries from unfair foreign competition. They claim that by leveling the playing field, we can boost domestic manufacturing and create more opportunities for American workers. But on the other hand, critics argue that tariffs are essentially a hidden tax on consumers. When you slap a tariff on imported goods, those costs get passed down to businesses and ultimately to you and me at the checkout counter. And that can lead to higher prices for everything, from clothes and electronics to cars and groceries. So who's right? Well, as with most things in economics, the answer is it's complicated. There's no denying that some industries and workers have benefited from tariffs, but there's also no denying that many consumers have felt the pinch of higher prices. And it's still unclear what the long-term impact of these trade wars will be on the overall economy. Now, here's where Bessen's background in finance comes into play. He sees the market correction as as a necessary reset, a way to purge the excesses and imbalances that built up during the years of euphoric growth. He's essentially saying, look, we got a little carried away, but this dip is just a temporary setback. It's a chance to realign ourselves, focus on fundamentals, and build a more sustainable foundation for future growth. And you know what? He might be right. Market corrections, while painful in the short term, can actually be healthy in the long run. They force investors to reassess their strategies, read out weaker companies, and create opportunities for new innovation and investment. Think of it like pruning a tree. You have to cut back some branches to allow the healthier ones to flourish. But here's a key question. Will this correction actually lead to the kind of transition Bessen is envisioning? Will it usher in an era of fiscal responsibility, economic resilience, and shared prosperity? Or will it simply exacerbate existing inequalities, leaving behind those who are already struggling to make ends meet? That's the million-dollar question, isn't it? And honestly, I don't have the answer. Nobody does. We're all navigating uncharted waters here. But one thing's for sure. The choices we make now, as individuals and as a nation, will have a profound impact on the kind of economic future we create. So as we continue this deep dive, let's keep asking those tough questions. Let's challenge assumptions, scrutinize policies, and hold our leaders accountable. Because ultimately, it's up to us to ensure that the American dream remains a reality for everyone, not just a select few. So here we are, facing a market correction and rising prices, and a Treasury Secretary who seems to be looking at the world through a very different lens than a lot of us. Bessen's talking about healthy corrections and necessary transitions, while folks out there are worried about making rent, putting food on the table, and seeing their retirement savings dwindle. And it's this disconnect, this gap between the lived experiences of everyday Americans and the pronouncements of those in power that makes this whole situation so unsettling. Because let's be real, economic theory and policy, they only matter if they translate into tangible improvements in people's lives. And right now, for a lot of folks, that connection feels tenuous at best. Bessen's asking for trust, asking us to believe that his vision of the future, a future built on fiscal responsibility, economic resilience, and a reimagined American dream will ultimately benefit everyone. But trust is a hard thing to come by these days, especially when it feels like the system is rigged in favor of those at the top. So where do we go from here? Well, I think it starts with acknowledging the very real anxieties and struggles that people are facing. That means listening to those who are feeling the pain of this correction most acutely and understanding how their experiences shape their perspectives. And it means demanding more from our leaders, demanding policies that prioritize the well-being of all Americans, not just the wealthy and well-connected. Because at the end of the day, the economy isn't just about numbers, it's about people. It's about families trying to build a better future work, striving for dignity and opportunity, and communities coming together to support each other. And if we lose sight of that human element, if we get so caught up in abstract theories and market machinations, then we've lost sight of what really matters. So let's keep asking the tough questions. Let's keep pushing for a more just and equitable economic system, and let's never stop believing in the power of collective action to create real and lasting change. Thanks for listening.